everyone, welcome to Capital Market Series Introduction to Market Participants. Let's look at learning objectives. At the end of this module, you should be able to name the various capital market participants. Describe the roles of each market participants. Illustrate how all market participants are connected to each other. First, let's set the context. I'm going to invent a fictional company called Megacorp. I'm going to assume we start back in the days when certificates were in paper form, and slowly move to electronic system as we progress. Finally, I'm going to assume that Megacorp already issued shares, and they are in the hands of a large number of individuals, banks, and other firms, and you're one of these investors. Let's get started. You own some shares in Megacorp, and you have a piece of paper that proves it, a share certificate. You'd like to sell those shares. Now you have a problem. How do you find somebody who is willing to buy them from you? I guess you could put an advert in the newspaper, or maybe walk around town, wearing a sandwich board proclaiming your desire to sell. But it's not ideal. Let's learn who are buyers and sellers before we find an ideal solution to sell your share certificate. Buyers and sellers are investors or traders who buy and sell shares to get return. Example, retail investors, high net worth individual investors, mutual fund, insurance, pension fund, etc. Know the score. Investors buy stock and hold it for a long period to create wealth. Traders involved in frequent buy or sell transactions to gain profit for a short period. Now let's look at the ideal solution to sell your share certificate. It would all be so much easier if there was a place where people commonly in the business of buying and selling shares could get together and find each other. Happily, we call such places stock exchanges. It concentrates buyers and sellers in one place to maximize the chance of matching them with each other. Now let's look at what is stock exchange. Stock exchange is a trading venue where buyers and sellers need to trade securities. It facilitates mobilizing savings, enhances securities liquidation. Example, National Stock Exchange, Bombay Stock Exchange, New York Stock Exchange and London Stock Exchange. Know the score. Bombay Stock Exchange is the oldest stock exchange in Asia. Started in 1875. New York Stock Exchange is the largest stock exchange in the world in terms of market capitalization. Okay, now you have stock exchange, you can go there, find buyer, and sell your shares. But wait, what if you're just an occasional buyer or seller? Do you really want to travel back and forth to London or New York every time you want to buy or sell? And as an out-of-towner, do you really think you'd get a good deal from the locals who spend all their time there? So you'd probably value the services of an intermediary, somebody who could go to the exchange on your behalf and get you the best deal they could. We call these people stockbrokers. Now let's look at who is stockbroker. Stockbroker acts as an agent for buyers and sellers who wish to trade for a commission. He is a trading member of stock exchange, and his service is necessary, since most investors don't have the access to the market. Example, Goldman Sachs, JP Morgan and Citigroup, etc. Know the score. Stockbroking in India traces its roots back to 1875, when 318 stockbrokers formed Stockbrokers Association. Now it is known as Bombay Stock Exchange. Guess what? We still have problems. Remember, I've asked my broker to sell my shares, and he found a buyer, and sold my share. Then what? We now have the tricky problem of settlement. The buyer wants the certificate and I want the cash. I could leave the paper certificate in my broker's hand and ask him to hand over it to buyer and receive cash on behalf of me. But that means placing a lot of trust in that individual. And remember, I chose the broker because of his negotiation skills, not because I trusted his bookkeeping skills. Worse, what happens if Megacorp issues a dividend? Do brokers really have the ability to collect the dividend, credit it into my account, and report to me about this in a timely manner? Probably not. So we need a person who can look after my certificate with good accounting, bookkeeping, reporting skills. We call these people custodians. So now, when my broker finds a willing buyer at the exchange, they can tell my custodian to expect to receive cash from the buyer's custodian and to send the certificate to the buyer's custodian. And while the share certificate is sitting at the custodian, they can deal with all the tedious things that can happen to a share during its life, like settlement, dividends, stock splits, voting, etc., and we call this security servicing. Now let's look at who is custodian. Custodian is an institution which holds securities and cash for safekeeping on behalf of high net worth investors and institutional investors. It offers bookkeeping services, receives dividend and interest on behalf of investors, reports transaction to regulator for compliance purpose. Example: State Street, BNY Mellon, and Citigroup. Now I can lodge my share certificate with a custodian, instruct my broker to sell the shares on my behalf by finding a willing buyer at a stock exchange, and wait for custodian to receive my cash. Are we done yet? Not so fast. There are still some problems. You have loads of brokers shouting at each other, making trades all the time. They need to get to a point where the buying and selling brokers agree completely on the details of the trade, and have communicated matching settlement instructions to the two custodians so they can settle the trade. That's not going to be easy. There's quite some work that must be done post-trade to settle the trade, that is trade matching, settlement agreement, etc. We call this process clearing. And there's a second problem. What if the buyer defaults? I still have my shares and wanted to sell them. And the price may drop before I can find a replacement buyer. So who can help me here? Yes, it is a clearinghouse who is intended to solve both these problems. Here's how: after a trade is done, the information is sent to the clearinghouse by the exchange. The clearinghouse does something clever. It steps into the middle of the trade. It becomes buyer to the seller and seller to the buyer. In this way, I have no exposure to the original buyer, and buyer does not have exposure to me. It's now the clearinghouse's problem. We call this stepping in process as novation, and clearinghouse as a central counterparty. Now let's look at who is clearinghouse. It is an entity of the stock exchange, through which settlement of securities happen. The details of all transactions performed by the brokers are made available to the clearinghouse by the stock exchange. The clearinghouse gives an obligation report to brokers and custodians who are required to settle their money or securities obligations within the specified deadlines. Example: DTCC, Crest, and Euroclear. Know the score. National Securities Clearing Corporation Limited. NSCCL is the clearing corporation of NSE. Indian Clearing Corporation Limited ICCL is the clearing corporation for BSE. We're almost there. But there are still some loose ends. To see why, consider this from Megacorp's perspective. What happens when the company issues a dividend or wants its shareholders to vote on something? How does it know who its shareholders are? Imagine it knew I was a shareholder. But What happens if I have sold shares to somebody else? How does the company get to hear about the new owner? Enter yet another player, the registrar or share transfer agent. These companies work on behalf of the issuers, mutual fund houses, and are responsible for maintaining a register of shareholders and keeping it up to date. If the company pays a dividend, these agents are responsible for distributing it. Now let's look at who is registrar or transfer agents. Registrar or transfer agents are the trusts or institutions that register and maintain detailed records of the transactions of investors for the convenience of companies and mutual fund houses. It ensures timely distribution of dividend and interest. Issue new shares, does stock split or bonus issue. Sending annual reports, guiding investors on voting rights, changing investors' address and contact details, etc. Example, Computer Age Management Services, Equiniti and ComputerShare. Just a reminder that we are still using paper certificates. But, clearly, paper certificates are a complete pain. They can get lost, you have to move them around. Whenever transaction takes place, you have to reissue them if the company does a stock split, etc. It would be easier if they were kept in one central location and do not have to move them around whenever transaction takes place, but just update ledger book. We luckily have an institution which does this. We call it Central Security Depository. In the early days, shares were kept in locker without moving them around, and it was known as immobilization. However, over time, people gained trust in the system, and they realized that there was not any need for paper certificates at all. Hence they moved from immobilization to dematerialization, which keeps certificates in electronic format. Let's now look at who is Central Security Depository. Central Security Depository helps brokers and market participants to store the securities in an electronic book entry format, safekeeps the securities, provides record-keeping services, and helps to transfer shares from seller's account to buyer's account. Example, NSDL, DTC and Crest, etc. Are we done yet? Yes, almost. But wait, what if something goes wrong in the process of investment? Do you think that investors' money or securities are still safe under custody? What if stockbroker manipulates share price or involved in unfair trade practice? Is there anyone to monitor these activities to protect investors? Fortunately, yes, we have Capital Market Regulator who monitors all investment activities to ensure safety of the investors by making law and enforcing authorities on all market participants. Let's now look at who is Capital Market Regulator. Capital Market Regulator is a statutory body that makes law and enforce authorities on market participants to protect investors. It frames code of conduct for market intermediaries. It promotes fair trade practices by restricting fraudulent activities. It encourages overall capital market development. Example: Securities and Exchange Board of India, Securities and Exchange Commission, and Financial Conduct Authority, etc. So now we have the full story. If I want to sell some Megacorp shares, here's what happens. My shares start off in the account of my broker, who uses a custodian for safekeeping. The broker executes a sale at an exchange. Exchange sends trade information to clearinghouse, and clearinghouse establishes brokers' respective liabilities, steps in as central counterparty, and orchestrates the settlement process. The buyers and sellers' custodians exchange shares for cash, utilizing the central security depository, and then company's registrar records this in share registry book. Finally, regulator makes law and enforce authority on all market participants to ensure fair market practices. Debrief. you should be able to name the various capital market participants. Describe the role of each market participants. Illustration how all market participants are connected to each other. Thank you.